Hi, this is P.R. Sundar. Welcome to the special episode where I'm going to talk, is it time to buy stocks? If you can remember, few months before I came out with a video, stocks to buy, I recommended Infosys and HDFC Bank, and both have been done reasonably well. When it comes to investing, I am a very conservative investor. I am not a very speculative investor. So you may remember the stocks which I recommended over a period of last 2 to 3 years. They are PFC, REC, BSE, So these are ITC. So these are all the stocks, that have given good dividend yield, a limited scope for capital appreciation, and because I look for more safety than the return. But of course, in fact, last year PFC and REC are two of the best performing stocks. So sometimes it can happen. Now, my question is markets is trading around all-time high and the new year is beginning. And many people started asking me, sir, is it right time to buy the stocks? And first, let me talk about both the sides, what the feedback I'm getting. There are some investor organizations or associations, they are trying to invite some speakers, and I heard that the speakers are reluctant to come and speak about any stock, and because they feel that the markets is at the all-time high, and there is no much steam left. Now in case if there is any correction, if they recommend any stock, if that stock goes down drastically, they will get a bad name. So there are many speakers, I heard they are not willing to be a speaker in the event. That's one thing. Second thing, I heard some of the mid cap, small cap, micro cap PMS funds, they stopped accepting money because they think that if they get the money now, in fact, more money will come now only. And if they invest at this very high place, and then tomorrow if market corrects, so these fund managers are going to get a bad name, and the investors will also lose. So these are the two feedback I got from from my sources. That's something. On the other hand, and I just posted a tweet. In fact, it was not my tweet. I just received from somebody to my WhatsApp. I just copied and pasted. In the last 10-15 years, most of the time, the markets either peaked out around Deepavali or peaked out around the month of June, and then market started correcting. And moreover, this time, budget can be a popular budget. It's not a full-fledged budget, it's a vote on account because May month there is a parliament election, but this budget may be a more populist budget. The markets do not like the populist budgets. And second thing, parliament election uncertainty is also there. Since the market has run up so much, ahead of the parliament election, some kind of a profit booking can happen. So these are all the reasons why the professionals are reluctant to infuse the new money now or even want to talk about the stocks. On the other side, there's a lot of discussion is going on based on my tweet. The people are saying, do you remember what happened in 2003 to 2007? 2003 to 2007, the first Nifty went from 1000 to 2000, and everybody thought 100% up. But that is from where? From 2000 it went up to 6000. That was the biggest bull run in Indian market. So some people tend to argue, now only market started moving higher. 2003 to 2007 can repeat now. But if you ask me, the first argument, the fund managers are reluctant, I will go with them because they are more professionals than the people who are arguing about 2003 to 2007. So in any field, only the professionals make money, amateurs do not make money. Okay, I tell you one small story. One real estate developer launched a project in Chennai, and then all the apartments were sold, and sold around 1,800, 1,900 rupees per square foot. And then builders started building the apartments. So usually multi big apartment sizes, ranging in 2,000 apartments, it may take 3 to 4 years for construction. So slowly they were doing, and then immediately the developer understood the prices of land is increasing in Chennai. This has happened sometimes in 2005, I think. Okay, but then he started feeling that he sold the apartments at a cheaper price. Now the land prices are going up. Everything is going up. Okay, so then what happened? The builder has actually completely stopped the construction at the site, and most of the buyers were NRIs, because that was a slightly higher price at that point of time, with a lot of facilities like swimming pool, clubhouse, and this and that. So the price was higher, and most of the NRIs who bought. Then suddenly this builder has stopped the construction. Then somebody from his office started calling all the customers and telling the customers, this builder is a dishonest person. There was no approval for this drainage connection. This project can never complete. You are working so honestly, as if this guy knows about all the people working honestly in the foreign country. So somehow they created a panic. Okay, and then sir, if you want to check, you can go to the project and see there no construction is happening. So this is actually the guy calling from his office by saying that he is honest to the clients. Okay, how can an employee be honest to the clients rather than to his boss? They are all set up. And then by listening to this, then these people went to see the project. Nothing is working on. So then so everybody they thought that their money will be stuck. So they started asking to cancel the booking. So wanted the refund. So what the builder has done, and returned all the money to all the people, and in fact he deducted some money also by saying that it's a penalty clause in the agreement. And then once everybody withdrew, so he continued the construction, and then he sold the apartments for about 6,000 rupees, about 3 times. He stopped in 2005 and he relaunched it in 2007. So this is one of the best examples I came across, where only the professionals make money, amateurs don't make money. Right? Amateurs by luck can make money, but this guy is a very, very smart guy. I would not even use the word smart. He's a very cunning guy. Once he understood the land prices going up, he made the trick, so that all the people withdraw, then he could launch at a 3 times the higher price. So the same thing in stock market also, a lot of manipulations and this and that. Okay, so first let me tell you why I'm feeling that the first batch of information is right, the second batch of information is wrong. Number one, okay, if you look at any asset class, whether it is for gold or real estate or equities, they tend to hugely outperformance in some period. Then following period, so they may not be outperforming, they may be underperforming. I give you the best example in real estate. So I bought an apartment in 1996 in Chennai. Okay, that was a peak of the cycle. But that time I did not know the cycles and those kind of things, So I bought it. Okay, and then I checked my neighbors. Okay, 1-2 years before, all of them would have bought it for less than half the price. I paid more than double the price within 1 to 2 years, and that was a peak. Then what happened, for the next 10 years, it has given zero return. I bought for about 1,000 rupees per square foot in 1996. 2005 also it was about 1,000 rupees. So 10 years it was zero return. But then 2005 it was 1000 rupees per square foot. 2006 it has become 2000 rupees per square foot, double in 1 year. 10 years zero return, in 1 year double. And then 2006 2000 rupees per square foot, 2007 it is 4000 rupees per square foot. So 4 times. 10 years zero return, 2 year 4 times the return. But in 12 year it is 4 times return is a decent return. So what happens, in most of the asset classes, in a shorter period there will be a huge outperformance. Okay, then after that there will be a lackluster performance. But if you are holding for a longer period of time, you would get better return. Better than the FD return, maybe 1%, 2%, but not more than that. You don't get like 5, 30%, 40% return every year, year on year, you don't get it. Okay, so the same thing only, it will happen in stock market also. The best example is Reliance Industries. So it went from 1000 rupees, like 2008 to 2018, for 10 years it was trading around 1000 rupees. Then from 1000 rupees it shot up to 5000 rupees in 3 years of time. Then after that, for last 1 year, 2 years, it is giving almost zero return. Alright. So the same thing goes with the gold. You go and check the gold. 1980, there was some oil crisis. The gold prices shot up 4 times, 5 times. Then for next 20 years, it has given zero return. I am talking about gold price in dollar terms, not Indian terms. Then after that, Lehman Brothers collapse time, it shot up like anything. Then after that, 5-10 years, no return. Then now this coronavirus period shot up, and then now this period is also going higher. So therefore, always remember, all the asset classes, they tend to hugely outperform for a shorter period. Then after that, lackluster. But what most of the people think, once this huge uptrend comes, so that is when the more and more people will have a faith in the system, the faith in the market. They will come and pump in more and more money. Then the next few years may not give good return. So I'm not saying that the markets will not give return. Okay, remember, if you put the money in bank FD, you get 7-8% return. Okay, market may give like 10-15% return, but market, somehow I feel that the market is already at peak. Right? So from here, multi-bagger return or 25-30% return may be very, very difficult. The people who argue 2003 to 2007, that is a totally different period. I always tell people, my son was 1 foot tall. From 1 foot tall, he grew 6 foot tall. Okay, but do you think that will there be any other time where he will grow from 6 foot to 36 foot? Highly impossible. Okay, the growth was seen because we were young. Okay, and you must see in 2003 and all, the valuation between India and other markets, it come to anything, right? If a tuar dal, say for example, tuar dal, if in India, if it is 20 rupees, in foreign countries it's about 100 rupees. So there is a fight. But now do you know that the tuar dal in India is more expensive than other countries? And how many of you know many public distribution system, what they call it as a ration shop? Okay, I'm sure about Tamil Nadu, I do not know about other states. So in Tamil Nadu, the tuar dal which is being distributed in the public distribution system, or what they call the ration shops, okay, it is not made in India, so it's coming from Canada. So tuar dal grown in Canada, that's called Canadian lentil. Okay, tuar dal grown in Canada, after spending a lot of money for transporting from Canada to Chennai, and it is still cheaper in India than Canada. Was it the case about 20 years before, 30 years before? Right. So earlier other countries were here, we were here. Okay, so that's why from here we could grow here. But if anybody think, okay, you see in 2003 to 2007 we have grown here, now we can grow here. You cannot end up a situation where houses in London and US is 1 crore, in India it is 100 crore, and how many of you know many highways, the land nearby highways shot up from 1 lakh rupees per acre to 1 crore rupees per acre. But do you think from 1 crore it can go to 100 crore? Okay, so all the village people, they can sell 1 crore, 1 acre land for 100 crore. They can settle down in any country with all kinds of luxuries for their entire life. That's not going to happen. So amateur people think, 2003 what happened, it can repeat. Of course, there is no doubt that India is a better growth opportunity. But you remember one thing, there is something called market efficient hypothesis. Whatever you know, everybody knows. Whatever everybody knows, it has been factored in the prices. You go and check the valuation. In most emerging economies, stock market never trade more than 10 PE ratio. So what is our market PE ratio? I think it's about 30, 35. So, we are already 3 times more expensive than other markets. That's because we have the opportunity for growth. So there's no doubt about it. So if you're thinking, too bullish, I think this is the time to put water on the fire, right? To reduce the expectation. But again, I'm not saying that the markets will not go. Markets will go, right? Right now, Nifty is trading around 22,000. Even at 10%, it can take to 24,000. So, in fact, my target for 2024 is about 24,000 Nifty, right? Okay. But the thing is, the people who are taking long in future, we will not even make money because, the rollover charges, right? So, it's alone about 170 point right now, for each month. So, that alone will take away about 2,000 points. Even if the market rally 2,000 point, the people who take long in future rollover every month, most probably they will get zero return. Okay. So do not have high expectation. Okay. And the story I told you, okay, the professional people, they will know, they will create some problem here if they want to sell the shares, okay, or they will create some hype if they want to buy the shares. At the right opportunity, they will exit and you will be trapped. Okay. So stock market is the place where one can make money easily. So this is the general perception. But the truth is that stock market is the place where it is difficult to make money. Right? So don't worry. Okay. Every now and then there will be some problem will come. And 2008 Lehman Brothers collapse, 2020 coronavirus, 2016 demonetization, 2015 China devalued its currency, 2013 taper tantrum, and then 2022 US inflation. Every 2 to 3 years, some kind of some big problem will come, markets will crash. Yes, that is the time you go and buy if you're a long-term investor. Don't chase the market. If you're a trader, you can chase the market. But if you are an investor, don't chase the market. So wait for an opportunity. I'm not saying that this is going to happen, but stock markets, how to say, anything can happen in the real life. So just 2 months before, nobody expected BJP to get 2/3 majority in Madhya Pradesh. Nobody expected BJP winning Chhattisgarh. Everybody said only Congress will win. But what has happened, it has become a big surprise, a big positive surprise. Markets have shot up, nearly 15% in last 2 months. Okay, so assume, okay, now everybody is expecting, everybody expected Congress to win when the BJP won, okay, market shot up. Now everybody is expecting BJP to win in the parliament election. Okay, I'm not against BJP. I'm just, for the sake of argument, I'm saying, suppose if BJP loses parliament election for one or the other reason. As of now, everything is looking favorable to BJP. I'm not saying no, but let us say something happens, some unexpected thing happen. If BJP loses, and then markets will crash 10% to 20%. So if anything such thing happens, then you may consider buying the shares. So what I mean to say, investors have to wait for opportunity. They need to have a patience. But the traders, they can do anything. So they can do the momentum. Technically, market is still long only. right? But those technicals, is for a short term, maybe 1 month, 2 months, not for a very long term. If you're a long term investor, wait for the opportunity will always come, right? So the PFC and the REC kind of opportunities will keep coming, and you can seize that opportunity. So hope you enjoyed while watching this video, and I hope you got the message. So thank you for watching.